All right, welcome back to another episode of the Anomalous Investor. So this week we have a continuation of things that's going on from last week as far as for the stock market continually pushing higher, breaking all-time highs and just charting new territory and giving us a bullish sentiment for the rest of the year. And also, we have some frustrations here with Trump and Powell and some interesting statements today that kind of rolled out. And also, we're going to take a look at crypto as we things kind of cool off from crypto week here. And we get some projections here going forward toward Q3 ending and going into Q4 and ultimately wrapping up 2025. So, getting into some of the major numbers here, let's take a look here as of right now. Today is Thursday night, Friday morning. We're looking at SPY at 634.42, right? So ultimately looking like right now that 636 is going to be that hurdle, but 5 days we're up 1.3% or roughly around $6.46. The past month, 4.5%, $27.30. The past 6 months up $35, ultimately recovering from that dip in April with the tariff news from 496, complete recovery, and then going into new territory here. Obviously up 8.51% on the year and year to date, and 1 year up 17.83%. So that in itself is showing very promising numbers, right? Because we've had an extreme dip here where our dip in April because of the tariff news was lower than pretty much a year to date, because a year to date was roughly 538 and we dipped to 436 in April. And that was just a few months ago and we recovered. So we're looking at a very bullish sentiment for the rest of the year, because typically when we have we're green at this point in the year, typically on average we're going to see the year kind of finish up very strong, unless something crazy comes out or maybe like some battle of the tariffs, which we're going to talk about that in a second. But unless something comes up, on average we can typically expect to maintain this tone for the rest of the year here. QQQ 565. We're just seeing green here across the board. 5 day is green, 50.54. Green as well on the 1 month. Yeah, so green across the board here. Let's see. I want to pull up the market here. So yeah, so overall the weekly recap: S&P 0.6% to all-time high, Nasdaq new highs, Dow Jones slightly below highs. Dow Jones kind of is flat, roughly around, you can say 0%. And obviously the small caps are lagging here. We got around the Russell 2000 is down 1.4%. And we know as the markets kind of shift and we see a lot of that capital flow into AI and kind of have like that condensing of the Magnificent Seven, of, as in those who are going to invest in AI and those who are not. We're going to see the consequences of that going forward, and maybe even have some shifts in as far as replacements and pertaining to like that top 500 spot, and also longevity, right? Where that capital is going to ultimately come from, where it's going to stay, which companies are going to lead that push going forward. A lot of that is going to ride on those investments that they're making into AI, and if they're making them or not. So that's something we talked about last week with Apple and Microsoft. We see that Meta is a very serious player in this, and obviously Nvidia. So we're going to be keeping an eye on that going forward. Some things that we're looking at coming ahead is obviously the Fed decision on July 30th, which is coming up next week, and obviously the tariff deadline for August 1st, right? And then, of course, we have some big earnings coming up with Google and Tesla, and that's going to give us an idea on their next moves here. Now, if Tesla goes lower, I am going to be, because again, for those of you who follow me on X and other platforms, Tesla has been good to me. I've made more money on Tesla than any other stock. Nvidia is coming in close, but Tesla has been really good to me. If Tesla goes any lower, I am going to be forced to start buying again, because I am a advocate here for Tesla long term. Yeah, let's see. 305.30 as of right now. 35.17 was down 35.17 over the past month. Down 16.46 over the last 5 days, and we had a dip here today. Um, yeah, down rough. Oh my God, yeah, it's just red across the board. Year to date, red. 73.98 down year to date. The only thing that's technically up on is what would be like, technically like a recovery here, but overall, yeah, even though for the last 12 months, the dip here has erased a lot of the gains here. But the only thing it's technically up on is the past year. It's up roughly around $89 because it opened up on July 24th at around 215. So any of those short term numbers, Tesla is down on. And I like Tesla because Tesla is known for its swings. For those of you who've been day trading and have been in the market since roughly, I'll say 2020, 2019, it was nothing for that stock to do $40 swings in a day. Again, it was like a day trader's dream back then. So Tesla is not necessarily known as like a stable stock or something like that. It's known for its swings, but typically when it dips, and when it rips, it's going to rip. So we're going to be keeping an eye on that. I'll make probably some isolated videos covering Tesla and my thoughts on that, on this particular stock here, and getting into some of the macro things and what I believe Elon needs to do. We talked about that a little bit last week because I do believe there are some things Elon can do to kind of like reposition the company here, especially juggling Tesla with some of the other ones. But ultimately, I'm liking the prices that we're getting to. At some point, it becomes like a bargain sale where you can't really ignore it, despite what's going on in the macros. It cannot be looking good, but it's like this company has been known for recoveries and the innovation and things behind it. Not to mention the loyalists that will stand by this stock overall. So when you hit that hard bottom, yeah, yes, it may be flat for a while, but that explosion has always been life changing if you're able to be on the right side of it. So again, we'll get into that in a a different video here. So a market positioning report from Charles Schwab and J.P. Morgan are saying with equities near record highs and technical momentum softening, some strategists see potential for a consolidation or mild pullback in the near term. And I mentioned this on X yesterday to one of my followers. He mentioned something about a pullback, and I do believe that we're going to have one probably within the next 30, 45 days, right? And again, that's not the end of the world. I know we've had people pushing for a recession and the sky is falling. The bears are always going to be there, but the numbers that we're seeing right now don't reflect that. And if we're consistently breaking new highs even throughout the month of July and we're recovering from an extreme dip that we've seen earlier this year, that's a very strong tone, like we talked about earlier, for the market to push forward. It's healthy to get those pullbacks. It's not abnormal to have a people to take profits, for there to be repositioning here, especially going into Q4. You're going to see these types of these types of things happening here. So I do believe that we'll see one going into August, sometime in August, maybe even September. But I do believe we're going to see one within the next 30, 45 days here. So I think Charles Schwab and J.P. Morgan is right on with this. Use that as an opportunity, especially if you're long. If you've capitalized off of the positions in April, when if you're buying during the tariffs, you're up a lot right now. That this would be a great time to do some repositioning here. If you want to take some profits and buy back in on a potential sell-off, position yourself going into Q4, Q1 of next year. You're like, if you bought during the dips on the tariffs, you are no doubt in the green right now. So, kind of use this as an opportunity here. If you're seeing that we're breaking all-time highs and consistently pushing there, yes, there's going to be a cool-off. That's how markets work. So use it as an opportunity to position yourself and kind of get things on it kind of get a broader perspective going into to Q4 here. Crypto, I'm very surprised here because I was looking at some of the numbers here because I still believe Bitcoin is going to close ultimately higher this year. Even though we've seen some rejections here from like the mid to early 120s, I believe that overall, we're going to see a push higher here. Not just Bitcoin, obviously, as one of my expressions is, rising tides raises all boats. I believe that we haven't seen the best of Ethereum this year, and a host of other coins. And I think that what we're looking at is you're seeing this repositioning, kind of what we've been talking about here on the channel, which is what happens when we have a decentralized market kind of converts and changes into centralization, and it starts to become mainstream, and you're seeing the popularity grow amongst retail and institutions. And now you're consistently seeing, oh, this we want ETFs and we want exposure to crypto and Bitcoin, and we want to put it in our portfolios. And you're going to see a lot of that capital flow into the market, and this is going to, if you follow my channel, I said that we a few years ago that as institutions expressed their interest, and we saw like J.P. Morgan and all these other companies filing for trademarks, and even potentially having brokerages and offering different services with crypto, we saw that we said that there was going to be a flow of capital into the market, and over time, that was going to smooth out the volatility that we're seeing in crypto. And I believe that we're getting to that point because typically, as if you've been in crypto for a few cycles, if you've been here pre 2020, you know that, hey, yes, you have the run and then you have the sell off, and the sell off could be 80, 90% of the previous high. As that capital comes in from institutions, you're going to see that go away. You're going to see a more stability in the assets. You're going to see lessening of the opportunity for you to say, oh, I missed it, but I can still get it on 80, 90% because next cycle we're going to recover. Those days, if they're not already behind us, they probably are, to be honest with you. But those days are as this asset matures and grows into space. Those days that opportunity is going, that window is going to close, right? So when you are seeing these dips, whether that be panic sell-offs or due to macro events, tariffs, whatever the case may be, those are going to be your opportunities. Not waiting on a bear market or a crypto winter per se to kind of go in there and get those prices. So you're going to have to be a little bit more strategic with your entries going forward. And ultimately, this is going to be the progression of the space. We're going to see if you're going to have $1 million plus Bitcoin and things like that, you're not going to get that capital from retail. That's certainly going to have an opportunity for institutions to kind of come in there, right? And if we're looking at the broader thing as far as for perspectives on the entire crypto market, like your Ethereum, your XRP, your Dogecoins, your polka dots, whatever your coins are. Specifically, if you're looking at like the top 10, I like to look at those like the crypto S&P 500. It kind of gives me a broad idea as far as for retail institutions. I kind of use it as a map to gain insights on how the market is doing overall. When you look at these assets, they're going to give you an opportunity to get a feel of the overall market. And as Bitcoin rises, you're going to see that spillover, and then you have to say, okay, well, where's the other opportunity going to be, right? So as far as the capital coming in, yes, there's a lot of capital that out there that can still flow into crypto, but when you have higher priced assets, and I'm not saying Bitcoin's done, I believe Bitcoin is going to go astronomically higher, especially as we continue to expand our currency. So don't get me wrong here. But when you talk about the push that it takes, like how much capital is it going to take from Bitcoin at 120 to go to 240 to give you a 100% return, right? And see, and this is where you're going to have that divergence really again between institutional investors or I'll say higher net worth investors compared to the more common retail investor, right? Because you're going to say, what's the amount of time and capital that it's going to take for a Bitcoin to go from 250 to 500, right? Because that's going to take an enormous amount of capital, but it's just going to be 100% return, right? And then this is where we have that opportunity where things kind of become more attractive for people to invest in cheaper coins or lesser known coins to try and get to mimic a similar return, right? And one thing that I was a huge advocate before during the initial retail boom was to look at assets over time, right? Because a lot of times people got killed in the newer coins that were coming up. For those of you who were, I still believe that Dogecoin started the initial like meme coin phase, and how everyone, Elon kind of led that charge, and then we saw that diversification into other assets and that big liquidity pool, and they kind of scattered throughout the markets. But when you have things that are like let's say like a Doge, and you have like a Dogecoin's wife, or a little Bitcoin and medium Ethereum and all these kind of things like that, and say, hey, look, you missed those assets, jump in these. This is where those type of situations become popular again, and give you the illusion that, hey, look, you can kind of jump into these assets and make similar returns, right? It's going to mimic the returns that they did, and when they were starting out. And some of them very well may, right? But most of them won't. And this is what we have to kind of look at. A lot of those assets that were going to be the next whatever coin in 2020, 2021, they're gone now, right? They're, even right now, as the market is shifting and we're getting this new wave of capital coming in, they're nowhere to be found. They're not getting those initial bumps, right? The clientele, the supporters have scattered, and they're not being discussed as much. And people that have been holding or even accumulating over this period of time here, they're going to have some tough decisions to make soon. So one of the things I wanted to discuss is, when you're looking at these assets, again, not telling you specifically what to invest in, but if you are looking at these assets, history, the course of time, community, leadership, all of these things, inclination, as far as for having utility and being included in certain things, all of these things actually matter, right? Especially depending on the purpose of the coin and some of the functions and things like that. So obviously, if it's like scarcity value, like a Bitcoin, then I get not buying things on Amazon which are Bitcoin, but using something that is meant to be used as a currency can give a better positioning to the value of an asset and make more sense. But overall, you have to consider these things, right? When you are investing, right? And if you are not, and it's just simply return or flash in the pan or hype, then we're going to see a repeat of to what happened to a lot of investors a few years ago. And I don't want that for anyone. So make sure you're considering these things when you're looking at crypto. Same thing with stocks. We're seeing a transition here to AI. So I believe that we're going to the two biggest sectors going forward here, especially for the next, I'll say, 3 to 5 years, are going to be AI and crypto, right? And I think that if you position yourselves in those sectors, like if you're looking at, especially something that's dominating here, if you're looking at some of the bigger caps, if you're saying like a Nvidia or Bitcoin, I believe that you're going to be exposed here to the market leaders, and ultimately, when that capital continues to come in over the next 3 to 5 years, you're going to benefit the most from that. So it's something that you're going to have to position yourselves for, and kind of, and for those of you who have not, or if you're looking to do a similar strategy to 2020, 2021, then just consider it, because I'm seeing a lot of comments here. I have X, I have Instagram, YouTube, TikTok. I get a lot of comments on the daily, and I'm seeing people saying, "Oh well, I'm going to position myself now in such and such coin and such stock, and I'm not going to make the mistake of I did a few years ago," which is fine. But you have to understand, make sure that you're purchasing quality when you're investing, and not just saying, I'm still going to buy hype or something that just came up yesterday, and I'm just going to jump off at the right time this instance, because you're probably going to get a similar conclusion here, right? So ultimately, when you're looking at these assets, consider them, do your due diligence, and look for longevity and strength in these markets, because we're going to see a boom here in the stock market, crypto market. You're in the middle of a great repositioning here, right? And there's going to be a lot of capital shifting around, right? Money is going to be flowing out of indexes into new indexes, into new ETFs. Money is going to be flowing out of stocks into AI stocks, right? Money is going to be flowing out of the bond market. So if you position yourself right, you're going to be able to ride that wave up. But if you are positioned wrong, then you're going to miss it. So I don't want that for any of you. So anyway, that is my market update on Anomalous Investor, episode 8. Let me know, excuse me, this should be episode 9, but let me know your thoughts in the the comment section some of the things that you're doing going forward, position yourselves for Q4. Let me know in the comments, and I'll get to as many of you as possible. Thank you. Oh, and by the way, if you don't necessarily always listen to YouTube, this will be available anywhere podcasts are available. So if you can listen to it on Spotify, Apple, wherever you like. So if you like to just listen to the audio, you can certainly do that. And that's why I'm calling out the numbers here, so that way you can actually see well hear the actual numbers here and still get the same amount of value. So if you haven't, please download the podcast. It's the Anomalous Investor podcast. So you'll see a picture of pretty much of me on there. So if we can get those downloads up, I would certainly greatly appreciate that. And anyway, so with that being said, thank you guys, and I will see you guys in the next episode.